All right, let's get right into it. Welcome to this explainer. Today, we're unpacking something pretty exciting 10 digital assets institutions won't tell you about, and we are ranking them by conviction. So, what does that actually mean? Well, we're looking way past all the internet hype to see exactly where the massive financial institutions, the true smart money, are quietly putting their cash. We're going to rank these 10 assets based on how confident these big players actually are in them. Let's dive in. Here's our game plan for today as we climb up this pyramid of institutional conviction. First, we'll look at the smart money shift. Second, the foundational heavyweights. Third, the infrastructure builders. Fourth, real-world tokenization. Fifth, scalability and settlement. And finally, we'll cap it off with the privacy revolution.
Okay, starting off with Section 1, the smart money shift.
So we really need to start by shattering a big myth. While a lot of folks on the internet are busy chasing the latest meme coins, the big institutional money is strictly hunting for real, actual revenue. Look at this recent 2025 survey data from Signum. They asked these giant institutions exactly why they're buying digital assets, and a massive 57% said it's for portfolio diversification. Now, to put that simply, it's the old rule of don't put all your eggs in one basket. In the past, people bought crypto because it was a trendy new thing. But today, the big banks are buying in simply to make sure their giant piles of wealth aren't just sitting in one traditional, old-school basket. Now, you might be wondering, if they want in so badly, why isn't absolutely everyone jumping in right now? Well, the main roadblock is regulatory uncertainty. They're waiting for the official rules of the game to be written. But here's the crazy part. The core motivation for all that money sitting on the sidelines waiting is, again, just not wanting all their eggs in one basket. This means there are gigantic, massive reserves of cash, just waiting for clarity. The very second the rulebook is finalized, that money is going to flood right in. So when they do jump in, where is all this big money landing first? A staggering 85% of these big players are building their foundation by buying Layer 1 protocol tokens. Think of a Layer 1 token like the raw land a new digital city is built on. The smart money knows that if you own the actual land that everything else has to be built on top of, you hold all the real power. That leads us nicely into Section 2, the foundational heavyweights. These foundational heavyweights make up the first 3 of our top 10 digital assets. First up is Bitcoin. Big institutions basically treat Bitcoin like a digital shield, a safe haven to protect their money from inflation over time. Next is Ethereum. If Bitcoin is a shield, Ethereum is the bustling downtown city center where all these new digital ecosystems are actually being built. And third is Solana. This is the super high-speed rival to Ethereum, and it's grabbing a ton of attention. In fact, 54% of surveyed investors are actively interested in a Solana ETF right now. But looking at those big 3 brings up a really big question. What actually powers these giant networks behind the scenes? I mean, a real city is totally useless without electricity, water pipes, and roads, right? These massive blockchain cities are the exact same way. They don't just magically run themselves. They need specialized builders to bring them to life. Which brings us to Section 3, the infrastructure builders. We like to call these the data highways. Let's talk about asset number 4 on our list, Chainlink. Like we just said, blockchains don't operate in a vacuum. They need data from the outside real world to function. Chainlink acts as that super secure messenger. Right now, its network actively secures over $66 billion in value across the digital economy. Just think about that number for a second. Yet, its current token price looks incredibly cheap compared to the massive real-world work it does every single day. It's kind of like finding a sturdy bridge that carries billions in gold across it daily, but the toll to cross it is only a single penny. And right alongside Chainlink is asset number 5, the graph. If Chainlink is the messenger, the graph is like a giant magical library or a super fast Google search for the blockchain. Whenever a computer app or a super smart AI robot needs to find information quickly, it asks the graph. It organizes all the messy, complicated information so computers can easily read it. Right now, its total market size is sitting at just $272 million, which is pretty small when you realize it's the vital infrastructure that thousands of applications desperately need to even function. If the blockchain is a giant brain, the graph is the memory that lets the brain remember things instantly. These 2 builders are the hidden engines running the whole show. Moving right along to Section 4, real-world tokenization. The big banks are pouring unbelievable amounts of money into something called tokenized real-world assets, or RWAs. All this really means is taking traditional financial stuff, like US Treasuries or private loans, and bringing them onto the blockchain. But why do they care so much? Well, in the old traditional systems, settling the trade takes days of slow, boring paperwork. The blockchain does it in literally less than a minute. In fact, 70% of the money projected to flow into this space by 2026 is targeting short-term debt, simply because it gives these old-school banks massive efficiency upgrades. Driven by those incredible speed and efficiency upgrades, the total amount of tokenized assets is projected to absolutely explode by 10x. We're talking about reaching an astounding $3.5 trillion by 2026. The banks aren't just playing around with crypto anymore, they are actively moving the world's financial system onto these high-speed digital tracks. Leading this unbelievable charge is asset number 6, Ondo Finance. Think of Ondo as this incredibly sturdy, trusted bridge connecting traditional suit-and-tie Wall Street with the fast, new-school digital world. The smart money is watching Ondo very closely because it's already a massive success. Right now, Ondo is safely holding $3.5 billion in its tokenized treasury products. They are literally proving every day that you can take super secure government debt and make it lightning fast and digital. It is a huge favorite for the smart money right now.
All right, Section 5, Scalability and Settlement. How do we handle all this crazy volume?
To really get why assets 7 and 8 matter, let's look back at Ethereum for a second. It's a fantastic digital city, but just like a real city, the roads can get super congested and wildly expensive to drive on. Enter Layer 2 networks. Think of these as high-speed express lanes built right on top of the main highway. Arbitrum is currently securing about $15.89 billion in value, while Optimism tracks about $13.9 billion. Despite handling absolute mountains of money, both of their tokens trade at steep discounts compared to how much they are actually used. They are the express lanes keeping the traffic moving. And that brings us to asset number 9, XRP. Now, a long time ago, a lot of people thought XRP was only good for moving regular money from one person to another, kind of like a simple digital wallet. But it has completely shed that old payments-only image. The XRP computer network, called the XRP Ledger, is now a heavyweight champion for settling huge trades and tokenizing all those real-world assets we just talked about. In March 2026, it was handling 3 million real transactions every single day. The giant banks are definitely noticing how fast and reliable it is for their massive daily chores. It's become a true workhorse for the digital economy. Finally, we reach Section 6. The privacy revolution. Just a few years ago, anything involving privacy in crypto was viewed as kind of suspicious. But today, institutions realize it is absolutely mandatory. Enter something called confidential computation. Imagine you have a highly profitable, top-secret recipe for trading. You want a super smart AI to cook it up for you, but you definitely can't risk exposing your raw, secret ingredients to the public. Confidential computation allows computer programs to do the math and execute trades without ever exposing those raw ingredients to anyone. It protects a bank's top-secret strategies while still letting the network do all the heavy lifting. This massive need for secrets brings us to our final asset, number 10, Dusk. Dusk is a highly specialized blockchain built specifically for the financial sector, focusing on what they call the privacy of value. Basically, it lets big institutions turn real-world assets into digital tokens, while perfectly following all the strict government rules. But, and this is the magic part, it keeps their exact trading moves completely private from their competitors. It is the ultimate secret weapon for the smart money, because it obeys the rules but keeps the secrets. And there you have it, folks. The smart money isn't playing games. They are strictly chasing real revenue, real rules, and heavy daily usage. We climbed all the way from the base layers like Bitcoin, Ethereum, and Solana, through the builders like Chainlink and the Graph, through the bridge makers like Ondo and XRP, up to the fast express lanes of Arbitrum and Optimism, and finally the top-secret privacy powers of Dusk. As we wrap up this explainer, I'd love for you to do 3 quick things for me. Please hit that like button, subscribe to the channel for more fun data-driven insights just like this, and leave a comment below right now telling me which of these 10 assets is your absolute top conviction play for 2026. I honestly can't wait to read your answers. Keep learning, and I will see you next time.